Right, let's give you the update now on the markets. The JSE looking set to open to subdued global markets this morning, with caution prevailing ahead of the U.S. Federal Reserve policy announcement later. Now, the independent analyst, Jimmy Moyaha, joining us now to dissect the latest market moves. Jimmy, good morning to you, sir. I see you are still up, like many of us, burning the midnight oil. I wonder when the markets are going to close. Let's begin with this question. The focus is squarely on the U.S. Federal Reserve policy announcement later. What clues might this data give us about the economy and monetary policy decisions at a global level?
Good morning, Toli. Well, I mean, the data is going to be something that we expect. We are going to see interest rates coming out. We are not expecting a significant change there. But the policy conversation around that, as you mentioned, is going to be the most critical thing. That policy conversation is going to give guidance to the rate of tapering, if that rate is going to be increased, if it's going to be decreased. It's going to give guidance to possible interest rate hikes in the new year. I think one of the things that the U.S. is going to be reflecting on, and what they've been reflecting on for the longest time, is the state of jobs and the job recovery rate within the U.S. So a lot of the decisions that are going to be given around policy, around when we can expect rate hikes, when we can expect, or how we can expect the speed of tapering to be adjusted, is going to be centered around the recovery of the job market. We know that the Fed Chair, Jerome Powell, has been going on about the job market for the longest time to say that the strength of the job market is what's going to give rise to a lot of their decisions. And we know that with this emergence of the new Omicron variant, there hasn't been any jobs data that speaks to the effect of the Omicron variant just yet. So we might only see that jobs data coming out in December's data, or possibly in January's data. And so what we might see now is we might see sort of a tapered approach or a subdued approach for this particular month. But again, a lot of what's going to be said today, because it's the last meeting of the year, is going to be expectations around 2022 and expectations around the guidance for what the US Fed wants to achieve in 2022. So the conversation around the rates decision is going to be a lot more important today than the rates decision itself.
Yeah, talking about the rates decision, the Reserve Bank set to release the December 2021 quarterly bulletin. So the question is, what can we expect from this data, and might there be clues as to what the forecast for the new year might be?
Absolutely. So this is much like the data that we're going to be expecting from the policy conversation in the U.S., in that the Reserve Bank in this quarterly bulletin might give, or will most likely give, an indication of their expectations for 2022 in terms of interest rates. They'll give a breakdown of the performance of each sector within the economy within this bulletin. They'll also give just a performance of the South African economy as a whole in terms of things like our debt to GDP ratios and those sorts of projections that we have been monitoring, and those are numbers that are also being monitored very closely by ratings agencies. As you remember, earlier in the year there was the expectation that we would hit a debt to GDP ratio of about 80%, and we managed to avoid that slightly now at this stage with the increase in tax collections over the last quarter. So we were sitting just below the 70% mark. But again, the unemployment numbers that came out weren't very favorable, and alongside those unemployment numbers, the Reserve Bank's quarterly bulletin now is going to be more important, because if we forecast rate hikes into 2022, that could lead to a more dire situation with the fact that unemployment has increased and the workforce is stagnating, the labor rate within South Africa is stagnating. So if we have inflation continuing to grow without wage growth and without wage improvement, then we could very well see that a forecast of interest rates or interest rate hikes in the new year could be very detrimental to our state at the stand.
Yeah. The consumer price index for November is also due later from Stats SA. Any chance that we might see some improvement on that front, Jimmy?
Well, that is the expectation. We do expect to see some stabilization or some normalization of the CPI figure, because largely due to the fact that we saw that increase in interest rates, that unexpected increase from the Reserve Bank. So the whole idea behind that interest rate increase was to stabilize inflation and was to sort of try and rein in the devaluation of the rand at the moment. But the rand is still sitting above 16 rand. If we get data out today from an inflation perspective that says that that interest rate hike did not achieve its goal, then it might be a further reinforcing stance that that interest rate hike was premature. So the rate hikes and the future, the policies and the quarterly bulletin data that we're expecting to come out today will coincide with the CPI data. And I think the CPI data at this stage for South Africa, in the past, it typically hasn't affected a lot of our other markets as significantly as policy decisions. But I think the CPI data now will, just because of where we sit, as I said, with that recent rate hike and with the projections going into 2022 that we're not going to see an expansion of our labor force just yet.
Sure. You may have anticipated this question, Jimmy, based on how I opened our conversation. We're wrapping up the year, and with the JSE still on a high, which stocks were your best performers for the year 2021?
Well, from our side, Sasol did really well. Sasol was up about 53% from the time we called it in March. It was called in March when the stock was sitting around 220 rand. We called any dips on Sasol to be very good buy opportunities. Sasol dipped to as low as 195, and it did touch 300 rand recently. So that's about 53% gain on the stock there. The other big mover for the year was, of course, MTN. When we called the stock back in March again, it was sitting around 85 rand. It did reach highs of 175 rand, so that would have been just over 100% gain there as well.
All right. So Sasol, the one stock, at least Jimmy, is pointing to. Jimmy Moyaha, thank you very much for that markets update, independent markets analyst there.